we are going to see acceleration in precious metal prices, both gold and silver. And as we know, when they really start moving, silver moves a lot faster than gold.
Ladies and gentlemen, we have finally approached in 2025, and I welcome there Egon von Greyerz in obviously Switzerland. Egon, first of all the best for the new year. We cope with it as always, and we continue with our program to educate some people, right? Good to have you
Well,
again.
thank you, Jan. And yes, and good to be on your show. Yes, we will have a lot to talk about and a lot to inform investors about in the coming year. It will not be an easy year, I'm sure. We have a bit of optimism now because of course, the world has because of Trump, at least the people who believe in him. But I don't think that will last long. So we will have a lot of interesting subjects to discuss today and in the next few months. And I look forward to that. Yeah.
Yes, Trump is a keyword. We start with him, Egon, and then we look at the general situation as always, the markets, and also a bit further away to China, Japan interests. So I think interesting. Gold, of course, also. Let's begin with Trump. He is now in power and he signed already 200 executive orders, Egon, or at least he intended to do that. It is my impression that with Trump, we will see a lot more unpredictability, especially as you already indicated, when the expectation bubble bursts. What do you think?
Well, I obviously wanted Trump to win. My first reason was that he was more likely to not continue wars. It won't be easy to stop, neither in Palestine or in Ukraine, because these are conflicts that are much more complicated, especially in Palestine, which is as is thousands of years old conflict, and the same in Ukraine. But at least what the US weapon that they have is to not send any money to these countries, and to Israel and to Ukraine. And that will clearly at least limit the war, and I hope it will stop. But then, that he's not totally unpredictable, I would say, but he knows what he wants, and then probably the only leader in the West today who knows what he wants. I mean, we have disasters in the UK, in Germany, in France, etc. And here's someone who is determined and who will take decisions. As you said, 200 executive orders. I mean, that's remarkable, and it's a very interesting tool that the Americans have to actually take action quickly. Nevertheless, I mean, it's many of them are good. I mean, I like the one with he says there now from now on only two genders in America. I must say I like that. The many political parties around Europe have come to as far as many as 27 genders. So to have two, I agree with two. That's all I know also. So that makes it simple. And then the whole oil. That's fantastic. He's now oil. You the what was his expression? Pump, baby, pump. Or is it drill, baby, drill? Maybe it is. Yeah, drill, baby, drill. We will have a need for fossil fuels for the next 50 plus years, probably longer. It's 65 or 85% now of the energy in the world. So again, there, I mean, he recognizes that, and this artificial move to electric cars, for example, that the world isn't ready for. Let the consumer decide. So a lot of these decisions are very good in my view, and he has a corporate America behind him, and a strong team behind him. So that's positive. That's not going to help when it comes to solving the US problems, of course, which is a massive debt, massive deficits, and they're not going to go away with Trump. Probably become bigger because his spending is probably going to be bigger than the country can take. So we will have the same crisis as we would have for any president. At least there's a bit of optimism now, and therefore, a lot of us look forward to that. It won't change the view that we have on the world, but we'll discuss more of that, Jan.
Let's have a look at the situation as we always do. And the consumer, we know, plays a very important role in the USA. I found here a good indicator for the health and this is the car market. Let's have a look at this and some other statistics. I found it interesting, Egon. At the start of February, the total US supply of available unsold new vehicles was 2.61 million units. That's 870,000 units, or 50% above a year ago. Inventory was down from 2.66 million at the start of January. Days supply at the start of January hit 80, up 38% from the same time a year ago. So that's really looking not good. We have here a statistics that's for the car brands, and you see the American brands have particular problems. And as I just read, the US consumer, of course, the same as we have it here, the prices are ridiculous. So people move to used cars. Here is the used car index, Egon. It moves sideways, so looks still pretty good. And then we have, of course, the credit card debt continuing to mount. Here we got that. Then we see falling house prices. And this is a very dangerous fact for the US if you have borrowed against it, which nearly everybody did. And on the other hand, you have still high interest rates. Here is the 10-year bond, the yield. It will probably continue up with the flood of new papers to be issued. Trump promised a lot, MAGA, but reality sooner or later will catch him, and then he has to deal with it. What?
No, the average American is suffering. He has too much debt, and as we've said many times, he's probably one paycheck from bankruptcy. Um, so credit is very essential for the American consumer and individuals. And that keeps on growing, will grow. At the same time, the government debt grows and of course that with higher interest rates. So, as you know, I've always said that the long rates will pull the short rates up. The Fed will try to keep short rates down, but they don't control the long rates to the same extent, and that's why we see 4.6% 10-year bond yield. And in my view, I've expressed that many times, the interest cycle turned in 2020, and we are now in a long-term uptrend, and I would expect US interest rates, together with much higher inflation, to go about 10% over the next few years. And that, of course, will put enormous pressure on the individuals and enormous pressure on the US government to finance the debt. And then, of course, the optimism of Trump, which I think is wonderful for the country. Everyone is so enthusiastic now. But it won't last when you come back to the reality, especially of debt. And you cannot solve the debt problem by more debt. So that's when he will run into problem that any president would have done. It'll be interesting to see how he actually can deal with that. Because as we know, over time, no leader ever in history has been able to deal with the debt escalating at this rate. So he will be under real pressure. But we will have the optimistic period now for a few months, I hope. It might not last that long, but it could do. And let's rejoice about that. But the reality will hit Trump, and it will hit the US also, not because of Trump, but because of the over 100 trillion debt that the US economy has in total.
And what a coincidence, Egon. Trump got with his office start, a little gift. The debt ceiling was reached. US Treasury Secretary Yellen announced that the federal government will hit its statutory borrowing limit on Tuesday, today, prompting the use of extraordinary measures to avoid a potential default. This move comes just days before the Biden administration hands over control to President-elect Donald Trump and his incoming team. So he took over, obviously, in the meantime. In a letter addressed to congressional leaders on Friday, Yellen stated that extraordinary measures would commence on January 21st, today. These measures are intended to temporarily free up borrowing capacity under the current 36.1 trillion debt ceiling, which the Treasury reported had reached as of Tuesday, today. The Treasury will suspend new investments in two government employee benefits funds, the Civil Service Retirement and Disability Fund, and the Postal Service Retiree Health Benefits Fund. So that's already a bumpy start for Trump. The debt ceiling is reached, but in the past, we know that that was never an obstacle and was quickly solved. But something we have to keep in mind, maybe they have put some stones in his path. And another thing, very interesting to observe, we know that the possible banking crisis with a deteriorating economy is already brewing. The reverse repos, Egon, came down a lot. So the banks are less borrowing money from the Fed against securities.
Let me just comment quickly on the debt ceiling, Jan. It's a total
So
farce. It is. I don't understand why they have it. It's kind of discipline that never works. It's like beating a child every day, and the child is immune to being beaten. And it's the same here. That there is, the debt ceiling has increased since 1960. I think it's 68 times. 68 times in 1960. So why is it there for? The US hasn't been debt free since 1825. And actually the US debt, federal debt, has gone up without exception almost every year since the early 1930s. So the whole thing is a farce. We know that we're coming to an end of a monetary era. We know that that will end with much, much higher debts and high inflation, possibly hyperinflation. So they're fighting against something that they can't win. But of course, they will have to pretend that they're taking this fight on. But sadly, it's going to be a losing fight.
I think that is the reason, Egon, to pretend to have it under control, which obviously they don't. But now let's come to this reverse repos. And I really need your opinion here, Egon. We see it here from the Federal Reserve of St. Louis. It peaked here at over 2 trillion in January 23, and now it's close to zero. Either the banks do not need those reverse repos or they are really drawn off liquidity. What's your interpretation?
My interpretation is that this is temporary, and it won't last. I think it will reverse fairly quickly as the banks come under pressure. That pressure has to be refinanced by the Fed, nobody else. Right now, there has been some excess liquidity, and the banks have therefore coped without borrowing from the government. But the trend is clear to me. If you look at the long-term trend, we will see continued borrowing at much increasing levels by banks as they come under pressure, and the bad debt portfolio in property and commercial property, private property, and many other areas will necessitate much more, not just borrowing, but actually crisis solving also as banks come under pressure, like we saw just a couple of years ago. That will happen again, and lead to a massive increase in Fed financing.
That was our view or our look at the USA. Let's come to Asia. Totally overlooked from the mainstream, Egon, there is another big scandal or bankruptcy in the real estate market. China, as I always or as I frequently report on my channel, is not looking as good as they sell it to the outside. Not at all. China Vanke, a major property developer, finds itself in deep waters as officials wait a government takeover amid liquidity concerns and the CEO's unexplained absence, causing market jitters. And not just that, Egon, I stay in Asia. Longer dated US bonds have already touched 5%. We saw this at the beginning of our talk, with that milestone now seen by many on Wall Street as a new normal for the price of money. Similar spikes are playing out internationally, with investors increasingly wary of debt from the UK to Japan. There is a tantrum-esque type of environment here, and it's global, said Gregory Peters, who helps oversee over 800 billion as co-chief officer at PGIM Fixed Income. And look what Peter Schiff recently wrote on X. No one seems to care, but the yield on the 10-year Japanese government bond is just under 1.25%. Soon it will hit 1.5 and then 2%. Once yield moves above 2, JGBs, government bonds could crash, sending yields soaring. That's a problem if you are totally debt loaded and then the interest coming up. Not just a problem in the USA, also in Japan, UK, and China, real estate. So we see it brewing everywhere globally. I have no doubt that we will, after this little euphoria vanish, we will hit the brick wall one way or another.
Well, Jan, what you're describing is absolutely correct. The financial eras or cycles or monetary eras always end in first a massive increase in debt and interest rates and inflation, and then an implosion of debt. We have now still the explosion of debt around the world. Of course, Japan is a mystery that it lasted so long. But they are managing to hold the rates down there at the 1% plus level. It's not going to last as you said. Um, China has a massive amount of bad debt in the banking system, property loans. As long as the Chinese government is able to feed the people, they will cope with it internally. They don't need external financing, so there's less of a crisis for them. But it will be a domestic crisis also. And Europe is a disaster. We know that Britain is just goes from bad to worse the whole time. It's a disastrous government. If you saw at Trump's inauguration, there was not a single Labour person invited, as far as I know, but there were several Conservative ones, Johnson and Liz Truss, the previous Prime Minister, and of course Nigel Farage. So it's around the world. It's a problem. We're coming to the end of an era. We're coming to problem. We are in a problem, and the final stages of a problem that can only end one way, with like all monetary systems have ended in history, and that's making the currencies totally worthless, and also the debt worthless or almost worthless. We're going to see that. I don't know how long it's going to take. It'll take longer. Normally, it takes longer than you expect. I thought it would happen faster than it has, but nevertheless, we are in the now explosion phase or the exponential phase, as I have demonstrated many times in my articles with the football stadium, how fast it actually, if you fill it with one drop of water at a time, how fast it goes at the very end, and that's the stage we are approaching now. It's it's inevitable. It's always happened in history without fail. Every monetary system has failed. And everyone hopes that it's not going to happen under my reign. Every prime minister, every president hopes it's not going to happen when I'm there. And they've managed so far to keep the world going with fake money. But one day the emperor everybody will say the emperor is naked, and he really is naked. And that's not going to be a pretty sight when actually the world discovers that. And that's what we are approaching. It's only a matter of time. It's absolutely certain that's going to happen, whatever anybody says.
And gold and silver, of course, we have to talk about that also. Egon, more and more people seem to realize that the financial system is really in danger, and the ETF stocks, they are increasing. The monthly transparent holdings of gold that you see here now. And also, if we look at the charts, gold in many major currencies is at record high, although the retail, of course, and professional investors, we have discussed this, I think for 2 years or so, they are still sleeping and not entering the market. They will come late, as always. But before I ask you about your opinion, I'd like to show some charts of gold prices in certain currencies. Here we have, for instance, in US dollar, there it's lagging. In euro, we have a new high. Here in British pounds, the pound is weak. As you said, Britain is going down. Swiss franc, Canadian dollar, etc. So it's running up nearly in every currency. And gold and silver, they will not solve this problem we have right now, but that's the protection the people should grab and take to protect what they have now, because many will not be able to protect what they have accumulated right now.
Yeah, it's quite amazing that, for at least the last 25 years, gold has been going up with minor corrections, but the trend, as you showed, is so clear. We, for example, for ourselves and our investors, entered gold in a major way in 2002. It was to the pound, for example, £200 for 1 ounce, and now you show the graph is 2,200. So gold is up 11 times in pounds. And obviously we have been talking to investors about gold during all of that time, but still, it's only 0.5% of world financial assets in gold. And that's because nobody understands gold and no government wants to talk about gold or promote gold. No asset manager or wealth manager wants to have gold in their portfolios because they can't churn commission on it. And therefore they stick to all the funds and investments where they can earn big fees. So it's a very sad story. This is, but this is history. As no currency has survived in history, and gold is the only money that has survived. As we call it, it's nature's money. It's the only real money that actually manufactured by nature in the most wonderful way, and therefore, you cannot create an artificial currency that can equal gold, and that's why gold has maintained purchasing power for hundreds of years. So the world will discover it, both institutions and individual investors, but they always come late to the party. But you know, the party is going to start very soon, and we are going to see acceleration in precious metal prices, both gold and silver. And as we know, when they really start moving, silver moves a lot faster than gold. Investors must know, of course, that it's not a straight line. There are corrections on the way. Especially in silver, there'll be bigger corrections because silver is more volatile. But overall, as I said, we're coming to an end of a monetary era, and that end will mean the acceleration of the debasement of the currencies. Remember, that's all we're talking about. We're not really talking about gold going up. Gold isn't going up at all. Gold just reflects stable purchasing power. It's the currencies and the value of the currencies that will now descend at a much faster rate. And that will be reflected in the gold price. This is why I've been saying for certainly in the last couple of years, gold will be now revalued by multiples in the coming years because you will have also uh, central banks going from US dollar assets, US treasuries, that they're not going to hold anymore because of the confiscation of the Russian assets. And therefore, they will switch to gold. And that will be a major shift that will take place. They're not going to do it take time. They're not going to do it overnight. But it's inevitable and it's happening now and it's going to continue. And the gold that we have today in the world and is being also mined every year, which is 3,000 pounds, 3,000 tons, it's not going to be sufficient at current prices. That's why this increased demand will create much higher prices. So that's the situation. It's so simple. Central banks are gold holders' best friend because they will always destroy the economy. They will always print more money, and therefore they will always debase the currency. And gold will always reflect their actions by going up. Well, in not in value. Gold maintains its value, but it's going up against fiat currencies that are collapsing. It's so simple. So people, please understand that, and please understand that we're getting into the acceleration phase. It's not going to happen overnight. A big, slow, gradual process. It's going to be corrections. Nevertheless, that is where you should have part of your money, not only for appreciation of your assets, but also for protection, insurance against the banking system, which is so fragile and which is unlikely to survive. And if it survives, it's going to be with so much funny money, printed money that is worthless, which is again going to put upward pressure in the gold price. It's so simple.
That's simple, Egon, and therefore we try to reach to the people to prepare. Get your gold and silver now. It will be a rude reckoning for many people. So protect yourself. Do not follow the mainstream. Do that what worked over centuries and longer. Thank you, Egon, for today. See you next month, and who knows what will happen in the meantime. Thanks. Bye bye to Switzerland. Grüezi.
Thank you, Jan. And remember Trump, what he said, Trump yesterday. We're entering a golden age. That was a hidden message to that. Yeah, that everything he has inside his residence is gold, also not real gold, but so he understands gold, and we are entering a golden age. That's absolutely true.
Yes. Thank you, Egon. Have a good time in
Thank you.
Switzerland. Bye bye.
Thank you. Thank you.
Thanks.
Thank you.
Bye.